Hi, Keith Springer here with a quick market update. Well, the fear of a major market meltdown didn't quite happen as a lot of people had feared. We actually had our 10% correction about a month ago. Hopefully, this is the last one we see for a while. If you recall, I've been expecting a pullback before earnings. Didn't think it would be 10%. I expected somewhere between 5 and 8. We got about a little over 9 on the S&P and 10% on the futures, which is, well, that qualifies as a 10% correction. Been the first one we've had, in 2 or 3 years, and well, maybe a while before we get the next one. So I feel good about the market here. I know a lot of people are still very nervous, but I'm fairly optimistic through the end of the year. We're in a seasonally strong period, typically November, December, and oftentimes the first quarter is very good for the market. I expect this to be fairly similar. We had a very good earnings season. Almost 75% of companies exceeded expectations. If you recall, I had been saying that we were going to get a pullback before earnings was going to happen, sort of the earnings nap, I call it, and then earnings would be better than expected, and they were better than expected, which is driving the stock market higher. We're also having, sort of a melt up. People are panicking that they're not in the market, and a lot of investors and traders, institutional traders, started to panic that, hey, we didn't have a major downturn in the economy, that the stock market isn't reacting too negatively to the Fed quitting their quantitative easing. Everything rests on interest rates. Interest rates are low. There's some fear that rates might rise next year. I just don't see it. We're still in a major deflationary environment. As I wrote in the book, Facing Goliath, How to Triumph in the Dangerous Market Ahead, we're in a several year deflationary period. We're going to have deflation for several more years. As the baby boomers retire, they're replaced by a smaller generation. Remember, there are 90 million baby boomers retiring. They're being replaced by 65 million Generation Xers. There aren't nearly enough of them to take over the economy and to make it boom like the baby boomers. No need to fear the next generation, the echo boomers. Well, there's about 85 million of them, and that should make it for a very strong period once they get into their spending years. Unfortunately, we're still 5 to 7 years away from that. So for the next few years, yes, it's going to be a little bit tougher, but I still see deflation. We're also seeing some major cyclical deflation due to some industrial revolutions. We have an energy industrial revolution. We have a biotechnology industrial revolution. We have a technology industrial revolution. And it's going to continue, and those cycles are going to keep prices down. So it's going to be the tale of two worlds for the next couple of years. If you have money and you have a good job, it's going to be, well, a good period for you. But just like it's been for the last few years, if you're unemployed or you're looking for a job, it's going to be very difficult. Technology is replacing a lot of workers. So long story short, I'm optimistic. We are due, of course, for a bigger decline, maybe sometime next year. So we always want to be very careful. You want to, invest for need, not for greed, and try to get a reasonable amount of the upside without all the risk of the downside, which is what we always try to do for our clients. It's never about capturing all the upside and capturing all the downside. We're always after, hey, let's get the reasonable rate of return that you need, always protecting so you don't get killed or crushed if the market does collapse and it reverses everything you worked for. So that's what we're after. But I do see a pretty positive fourth quarter. I think the market will be pretty good. Maybe a little pullback here for the next week or two, or a little languishing now that earnings are over. But going into the year end and maybe into the first quarter, it could be fairly good. But again, the risks are always out there, so we want to be very careful. If you have any questions at all, always give me a ring. And thanks for listening.